So who are these key players? Basically, there are three types: the asset owners, the buy-side investors, and the sell-side. An asset owner does what it says on the label. They own or are responsible for assets that they wish to invest in some way. So that might be a pension fund, an insurance company, an endowment, anyone that has assets to invest. In some cases, asset owners do their own investing. But in many cases, they outsource that job to specialist investment management companies. So what about buy-side investors? These people buy securities or other assets either for their own account or on behalf of their clients. So if a pension fund or an insurance company invests its own assets, then their investment management arm is part of the buy side. If that same pension fund or insurance company decides to outsource the management of its assets, it will appoint a company such as Fidelity, BlackRock, or Schroders to manage the money on its behalf. Those companies are part of the buy side. Mutual funds and unit trusts are also buy side. The term buy side can be a little confusing because all asset management companies will, of course, both buy and sell securities as part of their portfolio work. But as the sell side only sells its wares, hopefully the distinction between the two will soon become clear. So what about the sell side? What do they do? Well, they sell research about companies, economics, and markets. They analyze companies' prospects and offer recommendations to investors on how they should trade. Sell-side firms also act as traders in shares, providing expertise and liquidity. So, if a buy-side firm wishes to buy or sell a stock, it will often use a sell-side firm as an intermediary. Household names on the sell side include Morgan Stanley, Goldman Sachs, and Deutsche Bank. Of course, just to complicate things a little, all of these firms also have buy-side operations. But they are probably all best known for their sell-side research and trading activities. On the buy side, the head guy in the investment team is typically the Chief Investment Officer, the CIO. But it is the portfolio manager, or PM, that gets to decide which securities to buy. They are responsible for pulling together portfolios that meet or exceed the benchmarks set by their clients. Benchmarks that take into account both the return generated by the assets and the riskiness of that return. Both the buy and sell side employ analysts who do detailed work on a given company or industry. The output will tend to be some kind of investment recommendation. The difference is that the buy-side analyst recommendation is only for internal consumption, whereas the sell side's is remarketed to the buy side. I mentioned earlier about specialties. Firms and analysts on both the buy and sell sides might specialize. Some may focus on just equities, also known as stocks or shares. Others may focus on fixed income, such as corporate or government bonds. Or they may invest in real estate. Alternatives is another asset class that you will hear mentioned. It's a bit of a catch-all bucket that might include commodities, futures, private markets, and hedge funds. More on hedge funds in a later video in this series. No matter the type of investment they specialize in, analysts are also quite likely to have an industry focus as well. So you might be an equity pharmaceutical analyst or a utilities fixed income analyst. The next piece of the puzzle is the difference between the front, middle, and back offices. When people talk about the front office, they mean the investment and sales teams. Basically, anyone who might talk to clients. The middle office, well, they manage risk, compliance, and sometimes technology. And the back office is the administrative support team. They're the people that handle the settlement of trades. There is also a range of separate firms that specialize in back office support, everything from custody to portfolio administration to voting shares. Finally, I should also mention data intermediaries. These are companies like Bloomberg, Reuters, FactSet, or Capital IQ who provide data, live feeds on market prices, or access to market news. They also take the financial information reported by companies and represent it in a way that tries to make it more comparable or more accurate. Each of these data intermediaries has its own way of adjusting financial data, something that might be worth investigating further, given the impact that the numbers might have on a company's valuation. So that's it, a quick run-through of the key players in the markets.